Good morning, everyone, and welcome to our webinar, How to Reduce Rates in Non-QM without affecting the borrower's out-of-pocket expenses. Throughout the webinar, if you have any questions, please use the question function in the webinar tool, and we'll get to as many as we can at the Q&A section at the end. Today's speakers are Josh James and Mark Lutzy. Take it away, Josh and Mark.
Well, good morning, everybody. Thank you for joining us. We're excited to be here and talk to you about Rate Cutter. I have Josh James here with me.
Hi, pleasure to meet you guys.
All right. So we are going to go to today's agenda, and let's understand what we're going to accomplish today. So we want to talk to you a little bit about LendSure and just who we are and what it is specifically that we do. We want to talk to you about the rate reduction, also known as Rate Cutter program, that we're really excited to put on display for you. We're going to talk to you a little bit about some associated regulations that come with using that program and getting a better understanding of that. And then we'll end with a question and answer period, and hopefully we'll have some answers for your questions. This is going to be a lot of information. It's pretty basic stuff, but it is definitely different than anything that's happening in the industry today. So it's going to be a new concept. And so we're hoping that not only do you get it, but you like it and you want to use it. So that's our goal. Okay, so a little bit about who we are, about us. So Josh, why don't you tell everybody here who we are?
Thank you. So we are based here in San Diego, California. We were founded in 2015 by the founding members of Accredited, who are still around today, if you're familiar with them from the pre-2010 era. We have regional centers in Ohio, Rhode Island, and Florida. Loans securitized that we do, it's a specialty we like to attribute ourselves in 2017 and 2018. So we have a lot of background and information and data that we can kind of analyze to break down and help predict what we can help our borrowers with. As I mentioned, we have the highly experienced management team, all with that familiar background in the non-QM sector. And currently we're lending in 34 states with the goal of hitting all 50.
So what it is that we do? Well, as a company, we decided early on that we were going to focus 100% on one sector of the mortgage industry versus lenders that are out there focusing on all sectors. So our specialty is non-QM, and that's going to be alternative documentation, bank statement loans. We have debt service coverage ratio loans. We do owner-occupied, non-owner-occupied, purchases, refinances, and pretty much foreign national, as well as I-10, and that kind of simply covers a little bit of our product offering. But that's not what we're here to focus in on. What we don't do is Fannie, Freddie, FHA, HARP, or VA loans. That has nothing to do with our menu or specialty. All of our employees are highly trained on non-QM loans. So what makes us different, Josh?
Well, first off, pre-qualifications. What we mean by that is you, the loan officer, give your account executive a call. We'll discuss that loan with you, make sure that is a possibility here at LendSure. And then following that conversation, both you and I feel really well about the future of that loan. You'll submit it in to me. You'll give the basics. We'll walk you through that process, and we'll pre-qualify that within 24 to 48 hours. You'll receive back a signed pre-qualification letter that you can distribute to your borrower, realtor, whomever you decide. And following that, we'll look at submitting the file into the system. What that means is we'll get disclosures out. We'll start prepping you for underwriting. Once everything's into underwriting, you'll get a full conditional approval within 48 to 72 hours, which currently we're running closer to the 48-hour mark. So it's really quick. Preceding that, once we get the clear to close, we have unsurpassed funding times. We have an excellent closing and funding staff here at LendSure that are really knowledgeable and able to assist us in getting those closed on time. With that, those common sense exceptions we allow to our guidelines. It's something that stands us apart from a lot of others, and that when we run into issues that don't typically allow loans to close, oftentimes, as long as they make sense or with a little documentation, we can overcome those. Specialties, like Mark mentioned, industry-leading bank statement programs, that's going to be our bread and butter. That's going to what really flies through the system because that's our niche. And in addition to that, aggressive approach to DTI calculations when looking at non-owners and a lot of different scenarios.
Okay, well, thanks, Josh. That's a little bit about who we are and what it is that we do. But that's not necessarily the reason that you're on the webinar today. You want to learn about Rate Cutter. So let's get into the concept behind the program, because it's a great place to start if you want to really get into the DNA of Rate Cutter. So essentially, this is an exclusive product, not only with LendSure, but to the industry. It has our ability to offer this product with our alignment with our investor. And with that agreement, it gives us the ability to charge discount points to a borrower that is not an out-of-pocket expense and that is stacked on top of the original loan. So that's the concept. What this does is it increases your LTV, it gives par pricing, remains the same, and it does not affect the product qualifications. We coined the term stacking, okay, because what we're doing is we're taking the finance points and we're putting it on top of the LTV into the next LTV bucket, but we're not charging you for that rate increase. So I'm going to give you an example of what that looks like.
So here's an example of our rate sheet. This is currently showing our LTV and FICO brackets. This is your base rate before all the adders, be it fixed or whatever. The scenario we're looking at a 740 plus FICO with an 80 LTV. 5.375 would be your base rate. When we're talking about Rate Cutter, what we would do is you could buy down your interest rate to 4.375. That cost added to your loan amount would actually put you in the 80 plus LTV bracket, which is a 5.75 rate, base rate. We are not going to change your base rate from 5.375 to 5.75. It will remain 5.375 on that base, even with the increase of leaving the 80 LTV bracket. It's a very powerful tool. So let's get into a scenario.
All right, so let's talk about a usual scenario that Josh, myself, as account executives here at LendSure, see every day. A loan officer calls in. They have a sophisticated borrower that is very rate conscious. More than likely, that loan officer has been to a few non-QM lenders already and have received price quotes from anywhere, let's just say, for 6 1/8 all the way up to 6 1/2. But that loan officer knows that borrower is not going to move forward with this purchase with interest rates in the 6s. Their mindset that they're a Fannie Mae borrower, they're interested at that 4 1/2 interest rate. So with that setup, the loan officer is in search of the lowest rate to try and get this borrower to qualify. So what are the specs on that scenario? It's a purchase transaction, be a purchase price of $625,000. They're asking for an 80 LTV, 20% down payment. It's a $500,000 loan amount. And when you go to our rate sheet and price that out, when you get to the appropriate adders, the end rate is going to be 6 1/4. And like I said, our competitors price anywhere between 6 1/2 and all the way down to 6 1/8. We're at 6 1/4. We're in the hunt, but does that help our loan officer, Josh, solve his problem or her problem?
No, it does not. As you mentioned, the borrower does not want anything in the 6s. Their mind's set on 4s, and to think about going to 6 is just a reach for that borrower. So how can we help?
So this is where Rate Cutter becomes a real solution. So what we've done is we've given this loan officer the ability to buy down the interest rate, put it on top of the LTV, offer a lower monthly payment, and all by doing so with Rate Cutter. So Josh, let's walk through the math here. First of all, can you sell 5 1/4?
Absolutely, I can.
So that's actually going to solve your borrower's problems, correct?
Yes.
Okay, so let's go through this.
So looking at a loan amount of $500,000, as we mentioned, 80 LTV, our 6 1/4 par rate. Your payment would be $3,078. Here's where it all kicks in. We're looking at 2 discount points, $10,000 on a $500,000 loan amount. We'll add that to the loan amount. So now you're at 510. Your stacked LTV is technically 81.6. We reduced your interest rate to 5 1/4. So that's a whole 100 bips. Your payment's now $28.16. So we're looking at a savings in payment of $262 with no out-of-pocket for your borrower. So what does this look like overall? With a standard lender, and compared to us, LendSure, using the rate cutter program, you still have a $500,000 loan amount, 2 discount points, $10,000 cost. They will remain the same with the $500,000 loan amount. They're going to charge your borrower $10,000 in closing costs. We are increasing our loan amount by that $10,000. Your borrower is not paying out of pocket. So, Mark, would there be objections with this?
Yes, there are objections sometimes to rate cutter program from borrowers as well as loan officers. So let's walk through some interesting facts that really help this program become a very positive program for a borrower. So let's just talk about payment. Some people on the call today may lease an automobile versus purchasing it. And if you ask, well, why did you lease the car? The typical response is the payment is the lowest. And so people are very payment oriented. So with that said, rate cutter gives people clearly the lowest payment option available in non-QM. And if they're very payment conscious, that's going to be a real help to them immediately. Another way to look at this is through recapture. Josh, why don't you explain recapture as it in this scenario here?
Of course. So tying into payment, in addition to our scenario earlier. So looking at that 6 1/4 payment compared to the 5 1/4 payment, we're saving $262 and change. And the cost of that $10,000 and the savings from the difference in the payment amount, over 3.18 years, your borrower would recapture that cost. Everything after that is profit. But when we're looking at these loans, they're not always 3-year loans or less, right? Sometimes they're full 30-year term loans. What does that mean for your borrower? They have a full term savings of $94,000. It's almost $100,000 they make just for spending $10,000 in equity.
So after 3.1 years in the loan, they've paid for the cost of doing this by recapture, and then they continue every month to receive a payment savings of $262 by making this decision.
Yes, Mark.
That's powerful. Okay, so let's talk about the last tool, or another tool, I should say, that basically defends the use of rate cutter, and that's appreciation. In this slide deck, we decided to use San Diego's appreciation rate because it's local to us here being in headquarters in San Diego. But nationally, you still have a 4 to 5% annual appreciation rate. So if we're charging 2% of the loan amount for rate reduction, and the annual appreciation rate is 4 to 5%, you're basically stating that within 6 months, the appreciation rate pays for itself alone?
Absolutely.
So we're using somebody's future equity in a purchase to pay for the cost of having a lower payment.
Yes.
That's amazing. Okay, and then why don't you talk about this last line, equity is cheaper than cash?
So by putting that cost into your equity, as Mark said, not in addition to all the other points that we made, cash out of your borrower's pocket could be used for future investments, other ways to make more money. Equity in the home comes at a cost. It's doing a whole loan transaction. So it's cheaper to put that into your loan and recapture that over time and save your out-of-pocket cash for emergencies, investments, and increasing your wealth in and of itself.
So we talked about a purchase example and how to lower off an interest rate, have the borrower receive a lower monthly payment and not have to bring that money out of pocket. Rather, it's financed on top of the loan. Do you guys have the ability to do that with a refinance?
Yes, Mark, we do.
Okay, so what I see in the market today is a borrower comes to a loan officer for a specific cash need. They're going to do a cash-out refinance. And let's just say that money's for college tuition or the purchase of an automobile, whatever it may be. It has a specific need and usually a specific number. So if the borrower's looking for $50,000 and at the end of the transaction you give them $38,000, are they satisfied?
No, they're disappointed.
Okay, so using rate cutter in a cash-out refinance, let's walk through this scenario here, Josh, and explain how that's the intent is to give the borrower still the full amount of cash they were looking for.
Okay, so let's look at a value of $700,000. Let's assume a payoff of $390,000. Your closing costs are $10,000. That would make, to give, as Mark mentioned, $50,000 cash to your borrower, then make your loan amount $450,000. The borrower wants the lowest rate. We know that we want to reduce that interest rate using rate cutter to accomplish that. We can stack that cost onto the loan amount. On $450,000, the buy down for 2 points to reduce that to 100 bips is going to be $9,000. So we're going to add that to the loan amount as well, making our total loan amount $459,000. Your borrower wants $50,000. Using this method, rate cutter, we can give that borrower $50,000 cash in hand with the lowest rate in non-QM. So, Mark, is this for everyone?
Unfortunately not. It's a program that you would think would be for everyone, but what we found by utilizing rate cutter on a daily basis is there are borrowers that simply are not interested in a low rate solution or a long-term solution. They're simply coming to LendSure for a short period of time. Maybe it's a year. They're going to refile their next year's tax returns and qualify on a full doc jumbo loan. Understood. My point would be is there an audience for the program? The answer is absolutely. And about half of our monthly originations actually utilize rate cutter in one way or another. And we'll get into what that means in just a minute. It's a very sophisticated and very attractive program, and half of our monthly originations are utilizing it. So you would think that the profile of the borrower that we're financing with rate cutter may be somebody with bad credit, or they're really getting 9%, but they don't want 9%, or that type of profile. The reality is that the borrowers that we're financing with rate cutter actually have very high FICOs, above 700. They have an average loan size of above 500, but many of them are even over $1 million. They're coming to LendSure based on bank statement needs as well. About 65% of our origination is bank statement loans. So anyways, I just wanted to point that out because it's important to kind of understand that the program may not be for everybody, but it does have a very wide audience.
So let's get sophisticated now. There's a lot of considerations that need to be taken into account when we're doing these rate cutter programs. Things that our primary adversary in this is Section 32. And what we're looking at when we deal with Section 32 is your loan officer compensation, the discount points for that rate cutter, admin fees, which are typically flat costs on loans, and then as an aside, in a weird way, title and escrow fees tie in. And I'll get into that in just a minute. But as a non-QM lender, our limitation is 5%. So let's go a little deeper here. So what is Section 32? Technically, it's a section of the Homeownership and Equity Protection Act, aka HOPA, that all of you are familiar with. Its purpose is to limit fees and protect consumers from financial abuse. Significance ties in every loan. I'm sure everyone on this call has had an issue on a file where you've had a Section 32 fail. It's all too common in the conventional world, less so in ours because we have the higher percentage. But for QM or qualified mortgage loan, Section 32 in the Fannie Mae space is 3%. For non-QM loans, we have 5% to make that room. For either, you're looking at broker and lender fees as a percentage of the loan amount minus your prepaid cost. That's where the title and escrow fees come in. So what that's referred to is the total loan amount. When we look at Section 32, we're not using, as in the previous example, $459,000 for the loan amount. We're using a specific different total loan amount after finance costs. If you want more details on that, I would absolutely check with your compliance, legal, or regulatory officer for more details. But let's take into a couple of those, as I mentioned, considerations. Depending on the loan size and flat fees, for instance, our underwriting for a full doc is $12.95 or $15.95 for bank statement loans. Those underwriting costs. Flat fees if you're charging, say, 1% plus $500 for your processor. Things like that, those flat fees make a big difference when you're looking at loan size. So let's look at a $200,000 loan amount. For a $15.95 bank statement transaction, $15.95 for the admin fee. In our 5%, that equates to roughly 0.8% of all the 5% room we have for fees. Alternatively, if we're looking at an $800,000 loan amount, $15.95 is only around a quarter of the 5%. It makes a huge difference when we're trying to fit all of those in. You don't have to understand these. We have account executives that can walk you through and guide you through these processes. We just wanted to emphasize and make those points that you're aware when we come back and say that on this specific loan, we can't do this, or we're limited to this cost. This is why. This is what we're working with to meet those regulations set by Dodd-Frank.
So rate cutter, one of the questions that I commonly get is it available on just one particular program? Can we attach rate cutter to, let's say, a non-owner or a foreign national? And the answer is yes. All of our programs are designed to combine rate cutter to maximize the lowest monthly payment for your borrower. So we have one limitation, and that is that the 80 LTV and below buckets are the qualifiers. So can you do rate cutter on an 85 or a 90 LTV, Josh?
No.
Okay, so the answer is semi-no, because you still can buy down the interest rates, but the cash has to come to close.
Exactly.
So that is the significant difference. 80 is your max, so it'll be a total of 82 LTV is your maximum threshold for financing or stacking. Okay, so what are the benefits? So our goal, lower rates, lower monthly payments, lower reserve requirements, and more qualifications. And we didn't really get into this yet, but if you've ever been involved in a loan structuring where debt ratio is the issue of getting the loan approved, rate cutter is another deal structuring tool that LendSure can provide to get loans to debt ratio. So just look at those advantages and consider using rate cutter for you to originate more loans. So Josh, do you have to buy down a rate cutter on every loan with 100 basis points of rate reduction, or is there a way for me to navigate a lower percentage?
Absolutely. Let me demonstrate that. So here's a breakdown of all the options we have for rate cutter. Looking on the left in green is how much we can reduce your rate. On the right is the cost of that. It's 2 to 1. So for every 8, it's a quarter cost to buy that down. So as I mentioned, when we're working through Section 32 and those things, that's how we're able to facilitate this, is anywhere up to 2 points to reduce your rate by 1%, we can do any variation of that to meet your borrower's needs. In addition, one of the limitations we have is that you cannot buy down below 4.99 on interest rate. So in those circumstances, let's say you're at 5.5, if it was just 2, you wouldn't be able to buy it down. So we have variations. In that case, we would do 1 discount point to reduce that half to put you at the 4.99 rate. So let's look at a couple examples, because one of the
one last thing I want to add on here, Josh, is that you actually have the ability to buy down your rate adders. So for example, a borrower is very interested in an interest-only loan. Well, if you go to our rate sheet, our interest-only adder is 0.25.
Yes.
Can I convert that adder into a rate cutter?
Absolutely. So you could finance that cost, buy down your IO from the quarter for 0.5 point, and just add it to your loan amount.
And still remain with that same par rate that I saw on the rate sheet.
Yes.
That's fantastic. Okay. So let's talk about an example. One of the things, just to let you know, Josh, is as you do rate cutter, it seems like borrowers, when they get their CD, actually have a lot of questions. And because loan officers aren't used to doing this, it becomes kind of a sticky situation. So let's walk through what a CD looks like using rate cutter so that we can get to the facts here.
Of course. So one of the common things I hear is we're double charging the borrower. That's usually the first fear. So let's walk through this example. This is an actual CD of a loan we funded, obviously pertinent details cut out. But we're looking at a $314,000 160 loan amount with a 6.5 interest rate. And you can see on here that there's 1.96% points for $6,160. Round that one up. So the structure of this loan is we started with $308,000 for the loan amount. We had a par rate of 7.5. The points to buy down, the 2 points on $308,000, we added to the loan amount, as in the examples we showed before. So this is how this one closed. We did a stacked loan amount of $314,000, as I mentioned, that you can see on the CD here, for an interest rate of 6.5. The 1.96 points you see in the closing cost details, That is, if we did 2 on the total loan amount, the amount would be off. To show $6,160, we have to adjust the percentage a smidge. And so that's why we're actually charging the borrower for $6,160. The reason that cost is listed is because we've increased the loan amount. So this cost accounts for that increase because those are the discount points. We've added it to the loan amount. When we loan your borrower this $314,000, they're going to receive $308. So this is how we finance the points without your borrower paying out of pocket. It's coming out of the loan amount.
So it seems to me like the focal points here, Josh, are going to be your original qualifying loan amount and your original qualifying interest rate.
Correct.
If you deviate from that and just move off of that and go right to your rate cutter rate and your stacked loan amount, is it confusing?
Yes, absolutely. And that's where a lot of people get lost. Focus on where you started. As Mark said, $308,000 and a par rate of 7.5. When you get to the CD, look at those numbers and compare it to what you're looking at, and it'll all make more sense. So let's look at one more example. $480,000 was our base loan amount. Borrower qualified for a par rate of 7.375. To buy down that interest rate, the one interest point for 2 discount points is $9,600. Adding that to the loan amount or stacking it is $489,600. So you can see on our CD, we gave them our stacked loan amount and the interest rate of 6.375. But again, as Mark mentioned, recall your original scenario. When we look at these points that I highlighted in the closing cost details, you're looking at the $9,600. We're going to subtract from the loan amount. You end up back where you started with a better rate.
All right, everyone. So in closing, let's just kind of recap a little bit about what we discussed. We talked about LendSure being primarily focused in the non-QM market. We gave you the concept of what rate cutter is. We gave you a purchase and a refinance example and walked you through how to use rate cutter as an obvious advantage to your borrower. Overcoming objections, the equity, the recapture, the lower payment are all ways to convince a borrower that this is actually a true benefit loan to them. The importance of Section 32 and how that incorporates with all of the rules and regulations, as well as the simple math that makes this work. Then using the tool to obviously close more loans, not only with deal structuring, but getting people into higher purchase prices if that would be considered for debt ratio, and then also the ability to qualify through debt ratio. There's more to this, believe it or not. In conjunction with just rate cutter, we have a lender paid comp plan that you can incorporate rate cutter with and actually maximize rate cutter. So one of our most popular loan programs that LendSure account executives bring to us is a lender paid comp program that has bought down an interest rate and additionally paid for the interest only in rate cutter with a 40-year term. So it was a real popular low payment option in the non-QM space today, and it was financed. So we look for win-win-win solutions, and that's a win to you, the loan officer, and getting paid, being compensated, a win to the borrower because we know that they're going to pay us back on a monthly basis, as well as they're happy they've received the best possible terms for them, and a win to us because that loan stays on our books, and it's a handshaking all through that transaction. So there's going to be a future presentation on Rate Cutter 2.0 that's going to get into more detail about how to incorporate it with lender paid comp and other features, as well as how to maximize that. So I know there's a lot of information that we put out on display. Definitely, I encourage you guys to ask and call your LendSure account executive to discuss the program. Hopefully this is it sparks some interest in how to get some more loans done for you. Rose, I'm going to turn it back over to you for our question and answer period here.
Awesome. Thank you so much, Mark. I've gotten several questions on whether the slides are going to be available. Yes, after the presentation, all attendees are going to get a copy of the PowerPoint slides, and they're going to get a copy of the recording for this presentation. We'll be sending that out within a couple of hours. And one of the questions is, are we limited to 2 points to buy down the rate?
I can take this one.
Sure.
No, and as it is demonstrated with that kind of breakdown, there's variations. It's a 2-to-1 cost, and you can do any reduction that fits within your loan that meets Section 32 limit. So anywhere within that, however you need to meet your borrower's needs, we have the capability to do that.
And as a reminder, everyone, please go ahead and use the questions tool to submit your questions, and we'll get to as many as we can. Jorge has a question. Can I use the rate cutter to get paid my points on a borrower-paid loan?
We've actually done that, Jorge. It's considered an exception to our policy. It's not normally how the program was intended, but if you talk to your LendSure account executive on that very specific question, we could get you a more concrete answer.
Okay. Clark has a question that might be related. Is the quote example already including lender paid comp for us, or is the borrower paid and we need to charge them above 2 points in order to make any money?
No, in all of these scenarios, we were doing borrower paid comp. The reason being, we didn't touch on the slide, but I can briefly capture, is we don't do YSP. We don't increase interest rates to pay lender paid comp. So with our lender paid comp plans, we charge your borrower points. So what we wanted to demonstrate here was strictly showing how we could fit those fees in there. But as Mark mentioned, we have a future presentation coming where we'll demonstrate being able to do lender paid comp and the rate buy down together.
Okay. And I think we have time for one more question. Can I buy down just adders?
Well, the answer is yes. It's more perception. The reality is that when you get to that final rate, you probably included in a bank statement adder, maybe an interest-only adder, maybe, who knows, a 30-year fixed adder. When you're looking at, can I take that 0.375 rate adder increase, and my original note rate was 5.75, which my borrower wanted, yes, then you can utilize rate cutter as a way to pay for that the cost of any one of those adders.
Okay, all right. That is all of the time that we have today. And if you think of any other questions, please reach out to your LendSure account executive. Thank you so much for joining us today.
Thank you.